Some weeks ago, Harry Auge suggested a video about Palantir. So thanks a lot for your comment, Harry. At first, I was a bit hesitant because before looking too much into the details, Palantir just seemed like a very complicated and overhyped stock that I really didn't understand very well. But when I started to look more into the details of what they are actually doing and how their business works, I was quite surprised of what I found. And in today's video, I want to share my analysis and my thoughts on them with you. For that, I'll have a look at their business model and markets, analyze their MOAT, and look at their latest financial statements to see how they are doing. I'll also check their valuation to see if now is a good time to buy. So sit back, relax, and let's explore Palantir's investment potential together. My name is Florian, welcome to Cashflow Maniac. Palantir has the ticker symbol of PLTR and they are listed on the New York Stock Exchange. They are working in the information technology sector and were founded 2003. At the moment, they have around 3,600 employees and their headquarters sits in Denver, Colorado. The market cap sits around $100 billion at the moment. Over the last year, the performance of Palantir was remarkable, and with over 140% returns, they could easily outperform the general market. And they could not only deliver this over the last year, but even since their listing on the New York Stock Exchange back in September 2020. Since then, they could deliver a total return of over 340% compared to the 84% of the S&P 500. With this kind of performance, it's no wonder that they are on the watch list of many investors. But the question is this performance warranted? Or only due to the hype around the stock? And what is the potential from here on out? To understand their true potential, we first need to understand what Palantir is exactly doing and how their business works. If you already have a good understanding of this, please feel free to use the bookmarks below to jump ahead to the market analysis or the financials. But if you are not very familiar with what exactly they are doing, I'll try to quickly explain it. Palantir in its core is a software company that provides data analytic platforms to help organizations to gather, combine, and intelligently use the data they already have in their databases. This data is oftentimes stored in isolated data silos, where different systems are not connected and can't interact with each other. Think of different programs that require different logins and work on separated databases. Many companies also have a bad data management strategy or even none at all. And from what I can see in my day job, I do agree on this 100%. These separated storage locations are called data silos that function basically like isolated islands that are cut off from the rest of the organization. And as a result, the access to critical information is often limited, which also restricts the ability to make well-informed decisions. And this is exactly where Palantir comes in. Their main products, Foundry and Gotham, are used to integrate, analyze and visualize large datasets that can also be composed of different kinds of data like databases or tools like Excel lists or notes documents or even readouts from CRM softwares. This software helps the customer to detect patterns, forecast outcomes, or in general, generate new insights based on the data that the company already has. And most companies today have vast data on many areas like processes, products data, digital twins, customer data, market data, and so on. And all this is usually in an unstructured form where nobody really knows which data is stored in what form and where. If a company like Palantir comes in and has a way to bring all this data together and make it usable, and I mean really usable in the daily business, this is a huge step towards data-driven decisions and can help to streamline operations and increase the efficiency of these companies. And for these use cases, their Foundry software is used by commercial businesses, while their Gotham software is mostly used by governments and intelligence agencies for law enforcement, counterterrorism, and the planning of military operations. And with their AIP, the Artificial Intelligence Platform, Palantir has also a platform that uses AI capabilities and machine learning tools to further enhance the analytic capabilities of their programs. Palantir is also helping their customers to integrate this into their workflows with AIP bootcamps so that they can get immediate results. This AIP is also not limited to Gotham and Foundry, so it also gives smaller customers a chance to use Palantir's capabilities and helps to broaden Palantir's target market in the end. The use of this has been growing rapidly, and Palantir has completed over 1,000 of these bootcamps in the last year alone. I would expect that they will focus on this a lot in their next quarterly report that is due later this month. For completeness sake, I also want to mention their Apollo platform that is a continuous delivery system for their other programs and helps the IT departments of their customers to easily implement and control Palantir's other softwares and also to keep them up to date. This helps the customers to efficiently manage and use Palantir's often customized software, which otherwise could be a real hassle. So all in all, Palantir has a very interesting and useful business model that still has a lot room to grow. The data analytics market in general is still a very young one and is expected to grow at almost 30% until 2032. So there is still a lot of room to grow in the market and huge potential for companies like Palantir and their competitors. And speaking of competitors, Palantir has quite a strong position in this market with their specialized software, technological expertise, and as one of the first movers in this sector. But they still have a couple of competitors like IBM, Snowflake, and to some degree even Microsoft. But because it is not so easy to switch your analytics solution once it was tailored to your software environment, they do have quite a strong moat. There are also significant barriers to newly entering this market because it requires a lot of very specialized know-how and investments to even try to compete here. So from a business model and market perspective, they indeed look very interesting. But many of such growth companies don't earn any money and oftentimes have a lot of debt. So how do the financials of Palantir actually look like? Since they only went public in 2020, we don't yet have a huge history to look back at. But over this time, they showed some nice growth of the fundamentals across the board in the top line, total revenue, as well as the bottom line, net income, as we can see here. And in fact, the company just reported their first profitable year with positive operating income and net income last year. And this growth trend is also still continuing. In the last quarterly report, they again showed very strong growth from their commercial products as well as from their government customers. Overall, this resulted in a year-over-year revenue growth of 27% in the last year. And what I find even more impressive is their success in acquiring new customers. Over the last year, they could grow their overall customer base by 41% and their commercial customer base even quicker with 55%. This somewhat confirms the market trend that we saw before and shows that there is huge demand for these products. So, since Palantir is only on the market since 2020, I can't show you the 5-year average growth rates like I usually do. So instead we'll be looking at the 3 years numbers today. And in the last 3 years, they could grow their revenue by 23%, their free cash flow by 4.6%, and also their EPS very nicely. Unfortunately, I can't give you any concrete numbers for EPS growth because this was still negative 3 years ago. What is not so nice is that the stock-based compensation here in blue is almost as high as the free cash flow in orange. And even though the trend of this ratio is pointing slightly downwards, I still find this quite an insane amount and hope that this will normalize a bit in the next year when and if the free cash flow grows further. Together with the net income, the net margin and also the return of invested capital have turned positive last year. And together with the EBITDA margin and the free cash flow yield, they could grow this very nicely over the last years, and the trend on all sides is still pointing upwards. At the moment, we have a free cash flow margin of 1.67%, which is a bit low for my taste, an EBITDA margin of almost 7%, and return of invested capital of 6.5%. These margins are all a bit low and quite a bit below other software companies. But they could grow it steadily over the last years, which is a nice trend to see. At the moment, the record is not enough to see if they can keep growing it over a longer period and also to hold it during different economic cycles though. The balance sheet is very clean for such a young and quickly growing company. They only have a long-term debt to EBITDA level of 1.6 times, which is nice to see and well below my thresholds for my investments of 3 times. But instead of taking on debt, the company has financed itself by issuing new shares. Since its public listing, they have diluted their shareholders by 8.7% per year. This is quite high and well above my threshold of maximum 1%. The company is also not paying any dividends. So even though they are growing very rapidly, they are not providing any rewards to their shareholders right now. In fact, with a high share dilution, the opposite is true. So now that we understand the current situation, let's also have a look at the projections for the next couple of years. The 14 analysts that cover Palantir give an average 1-year price target of $28. This is around 33% below the current stock price. The highest price is still 19% above the current price, while the lowest price target is at only $9, which is 80% below the price today. So overall, I would say that these predictions are so far from each other that it seems very difficult to give even somewhat accurate numbers here. So in this case, I wouldn't rely too much on any of these targets. Business-wise, their EPS is expected to grow with 18.9% per year until 2026, and their revenue should grow with 15.3%. This revenue growth is still very impressive, but it is also quite a bit lower than the numbers they had over the last couple of years. And this brings me to the elephant in the room: the current valuation. These valuations are beyond good and evil, as we say in Germany. With a PE ratio of over 250, an EV to EBITDA of 281, and a price to cash flow of still 134, they are insanely expensive and basically priced for perfection. I don't even want to compare them to the sector median because it is so far away. And not only that, it is also quite a bit above their own history since their inception, although we need to be a bit careful here. Because we still have relatively low absolute financial numbers compared to its market cap, every change in these numbers has quite a big effect on these multiples. But this doesn't change the fact that the valuation is very high. And this high valuation can also be confirmed with the discounted cash flow analysis. Valueinvesting.io, for example, gives a fair value of 360 for Palantir with their 10-year discounted cash flow analysis. And Alpha Spread also gives a fair value of around 920, which would still mean that the stock is almost 80% overvalued. So I think it is very fair to say that they are very overvalued at the moment. Before we sum this up, if you found today's video interesting, please hit the like button and subscribe to the channel so you don't miss out on my next analysis. And as a quite small channel, this really helps me out a lot for pushing the video to a larger audience. So thank you very much. And now back to the question, is the hype around Palantir justified or not? When I started my analysis, I honestly didn't expect too much. But I was surprised by what I found. So thanks again, Harry, for your suggestion. I find the business model and the products of Palantir very interesting, and it is also great to see that they could keep growing with such a pace without loading a lot of debt on their balance sheet. Unfortunately, this came at the cost of the shareholders that got diluted quite a bit. They also have huge secular trends in their back, and I think that they can keep continuing their growth over the next few years. But the current valuation is just too high and doesn't reflect the expectation that the growth over the next years, while still on a very high level, will probably be a bit lower compared to the last years. I'll still keep an eye on Palantir from now on and might even enter a position if the valuation comes down to more reasonable levels. But truth to be told, I also don't expect this to happen in the near future, so I might be observing this stock from the sideline. But please, before investing, do your own research and only use this video as a starting point for your own analysis. And if you are looking to diversify your portfolio and potentially even increase the performance with small cap stocks, my Small Cap Sunday series might be interesting for you, where I analyze promising and stable small cap companies aside from hype stocks. That being said, thank you so much for watching, guys, and see you in the next video.